Hello, my name is Oscar Faulkner, and today I'm joined by Valente, partner at L.E.K. Hello.
Hi.
Biotech funding appears to be recovering. What does that mean for the pharma services ecosystem?
Thank you. Yeah, it's very good news. The biotech funding has been through a phase where the outlook was not so positive, and nowadays we're seeing a return to high levels of funding, which will hopefully translate into demand for pharma services as the companies develop new drugs and bring those to market. The question always is how quickly will that funding for the biotech translate into actual services provided by CROs and by manufacturing businesses. But it is a positive sign, it's a sign of confidence in the space. And we're now back at levels that we had before COVID. So it's a pretty good news for the space. Again, it will take a bit of time, 12 months or so, until it converts to actual revenue for businesses.
Everyone is talking about AI disrupting pharma services. How real is that threat?
It's a combination of threats and opportunity. We tend to talk about 3 dimensions of AI when thinking about this with our clients. It's the customers are changing their behavior, your competitors are using AI to be more effective, and you can also use AI internally to be more productive, to improve your operations. And businesses have to think about the mix of opportunity and threats from all of these 3 dimensions. What we're seeing though is, because AI is helping with a lot of the early stage of the development of drugs, we're actually seeing more clinical trials starting because there are more compounds to be tested, which hopefully should be another positive driver for the space. But at the same time, the competitive intensity between players is intensifying because operators are looking for opportunities to use AI to be more efficient and pass some of that efficiency to their customers as well. So it's a pretty dynamic moment in the market at the moment.
Publicly listed pharma services companies have seen a dramatic sell-off this year. How structural is that, and how will this impact the wider market?
Yeah, it's been a tough year for the listed players, particularly as we went into the end of the quarter. A lot of the big pharma services players had 20 to 30% price declines, share price declines, due to a combination of factors. Some of them are specific to the companies. A couple of situations that are really specific to accounting challenges or cancellation challenges. But there's a few topics that also impact all of them. You know, the AI risk again is something that has been bearing quite a lot of the valuations. But when we look at the underlying dynamics of the businesses, actually the sales are stronger, the revenues are stronger than prior years. So it seems to be a bit of some of these AI fears and some of these specific situations that are pulling down the valuations when the underlying activity is actually pretty strong. So we're hoping this is actually a good buy opportunity for investors, recognizing there are some of these challenges to address over the next 12, 18 months.
Thank you very much.
No worries.